First up, the disclaimer. Nothing in this video is financial advice. Please pause the video now and read the disclaimer in full. For complete transparency, I have not been paid any compensation whatsoever for this video. Any time I have is always disclosed. I also haven't currently invested at the time of recording, but may do so over the coming days. If you've been watching recent videos, you'll know I'm obsessed with security tokens, and in particular, the security token infrastructure layer. I believe it is only a matter of time before everyone is talking about this. Therefore, I've been dedicating all of my time to researching this and sharing it with all of you so that we can basically get a head start on everyone else. In this video, I'm going to be interviewing CityBlock Capital. They're a tokenized VC fund who are investing into the security token infrastructure layer. The most interesting thing about this project, other than their investing thesis, which I'm obviously very well aligned with, is the fact that they are making a tokenized VC fund. What does that mean exactly? Well, a VC fund essentially invests into early stage companies with high growth potential, but it's the word tokenized which is particularly interesting. With a VC fund, usually you have a 10-year time horizon, which means you get some incredible opportunities there. You might find the next Facebook or Google. Problem is, you have to lock up your money for a long period of time. Security tokens are excellent for facilitating liquidity in otherwise illiquid markets. Venture capital funds have historically been incredibly illiquid. And what that essentially means is once you put your money in, it's very difficult to take it back out. Therefore, instead of issuing a share, which represents ownership of the fund, you can issue a security token, which essentially means the same thing, but instead you can then trade that security token on a secondary exchange, such as T0, Open Finance Network, and in this case, SharesPost. By being able to trade it on a secondary exchange, you now have facilitated liquidity. You don't instantly have liquidity because you still have to have buyers and sellers, but you have a much easier ecosystem for building said liquidity. In the case of CityBlock Capital, there will be a 45-day lockup period for non-US investors and 1 year for the US investors. That is considerably better than the typical VC fund model. For some of you out there currently thinking that sounds like a long time, hopefully, if anything this bear market has taught you, it is to extend your time horizons. Don't think in terms of 1 or 2 months. We've all learned from the last year that that is not the right way of viewing this market. Often taking a long-term perspective on investments means that we come out at the end of that time period much better than we would have otherwise. Final couple of things before we begin with the interview. First up, I am not advocating anyone invest into CityBlock Capital. My only role here is to provide information for you guys so that you can go away and do more of your own research before making up your own mind. Please always bear that in mind. And in the interest of providing extra information, it truly saddens me to say that if you're from the US, the heavily outdated US accredited investor laws apply, which means unless you're an accredited investor, you're not going to be able to participate. If you are, there's a $50,000 minimum investment. If you're from outside of the US, so that's me included, there is a $5,000 minimum, and whether you can invest or not is based on your own local laws. So please also research that. Without any further ado, let's begin with the interview. I'm joined today by Rob Nance, the CEO of CityBlock Capital. Thanks so much for joining me, Rob.
Hey, thanks for having me.
So let's jump in and first talk about yourself. So just explain for the audience what kind of institutional background you have.
Yeah, sure. So my background is in banking, both investment banking and private banking. I left that about 4 years ago to start my first venture fund with one of my clients. We invested in technology and what we call consumer product technology. That's been for the last 4 years. Got ready to raise our second fund and saw a big opportunity to structure it in a unique way using blockchain technology.
Absolutely. I mean, I think on this channel, having people who followed it know what a security token is. They understand tokenization. They kind of know what VC funds are, and they understand the opportunity you were saying is getting rid of the illiquidity discount, with a tokenized VC fund potentially unlocks liquidity in the market, hence alleviating that issue. But as I mentioned to you before, I don't really want to have a high level conversation. I want to jump into the real specifics here. So let's talk about the market opportunity which exists. Let's jump straight into it. Where do you specifically believe the biggest opportunity in the market is right now?
So the biggest market in security tokens, or the biggest investing opportunity in general?
Let's go with security tokens. So you guys listed about 7 or 8 security token infrastructure related plays. There's like clearinghouses, depositories, security token services firms, and about 5 others.
Sure.
Let's not necessarily go through every single one, but is there particular segments of those which you're very interested in?
So we're really interested in the intersection of capital markets and blockchain. And this is like a super unique area because a lot of people from traditional capital markets don't understand blockchain. And a lot of people from blockchain don't understand capital markets. In fact, I've spent a lot of time in Silicon Valley, and even the big legacy Silicon Valley venture funds don't understand this space. And so basically what we see is the existing capital market infrastructure, which is wildly inefficient, both in private markets and public markets, being rebuilt using blockchain technology. The example that I often give is today, if you own a share of Apple stock, you physically cannot get a share certificate that has your name on it that you could sell to someone else. So I couldn't sell it to you. It's impossible. It can't happen today. And that's because the way that it's structured is that every US stock is owned in the name of one company. And they've set it up on purpose. It's called CD and Company. And it's a wildly inefficient trading system. So inefficient that in 2016, there was a lawsuit for Dole Foods, a huge foods company, because they didn't know how many shares of stock they had. I mean, think about that. 2016, a major company didn't know how many shares of stock they had.
Yeah.
So we see this opportunity to replace this patchwork of 1980s technology with a brand new system. And so there's a couple places that really, really interest us, and a couple places we've already made investments. So one of those would be digital asset exchanges. So if we believe that every stock, every bond, every commodity, and every currency will become digital, and certainly we've seen that with currencies like Bitcoin, we believe that a new infrastructure has to be built to trade that. So one of the investments we made, and one of the places we're really excited, was started by the Intercontinental Exchange, which is the parent company of the New York Stock Exchange. The company is called Bakkt, BAKKT, and Bakkt is doing 2 things. One, really 3 things. It's building that digital exchange we talked about. 2, it's building a futures market. And what's exciting about the futures market is that currently the futures for Bitcoin, for example, are cash settled. And as you know, most commodities are actually physically settled commodities. You have to take delivery of the actual commodity. And we think Bakkt will be the first person to create a physically settled futures market for Bitcoin. And the second is when they announced their round of funding, which we invested in, 2 of our co-investors, one is McDonald's and one is Starbucks. Well, why is that important? Well, today when you go to Starbucks, you often have an app, and on the app you have money that's loaded on, and they scan that and you get your coffee. But that's all done through US dollar and fiat. Well, what's the problem with that? Well, every transaction, Visa or MasterCard or American Express gets a piece of that. So that's 3 to 4%, let's say. And what McDonald's and Starbucks sees is if we could use cryptocurrency for this, and we could eliminate those transaction fees, that's 4 to 5% of their 3 to 4% of the revenue is a huge, huge number. So that's kind of on the payment side. So we really are excited about trading. We're excited about payments. And we're really excited about entrepreneurs that are bringing their robust capital markets experience into this space. So I look at somebody like Togomi. So Togomi was started by the former head of global electronic trading for Goldman Sachs. And what he saw was when you look out at the ability to buy stock, right? If you're buying a large block of stock in the traditional markets, you look across exchanges, you look across OTC desks, you look across dark pools, and you buy a combination based on the price in those different exchanges. Well, they're building that for institutions, but for cryptocurrency, and they're building it as more assets become digital assets. So we're seeing entrepreneurs look different than they ever have before. They're not 21-year-old Stanford graduates. They're people with decades of capital market experience. So those are 2 examples of what we like. We're also investors in Coinbase. Obviously, we think the way that Bakkt is going to bring crypto payments to the physical world, That's what Coinbase is doing for the digital world. And we think there'll be a real competitor with like Binance in the future as they continue to grow. The last we really like is data. So data is really important. Having data that traders can rely on, that institutional traders can rely on, is important. We invested in a company called Nomics that provides an API company that provides us high quality data that's been cleaned, that has order book in it, things that that traders rely on. So when we look at this space, those are areas that really excite us. There's some issuance platforms that we really like. We've worked with Securitize to issue our token. I really like them. I really like what they're doing. So that's at a high level how we think about the space and some of the investments we've made and what we're excited about.
Okay, you kind of jumped to a later question of mine, but let's
oh no
current portfolio. No, it's cool. So I actually looked and I saw your current portfolio. The only company I could see was Nomics, and then you've just mentioned Coinbase and Backed as well, or ICE as well.
Right.
Could you tell me roughly what your current portfolio is then?
Sure. So we've made 3 investments to date so far, and I talked about it a minute ago, but that's kind of where we sit today. You had another question. I can't remember it now.
Yeah, I was going to ask roughly like the proportions.
Okay. So yeah, so
$10 million.
Right. So we don't disclose exact position sizes.
Okay.
We're investing in private companies, and private companies want to stay private. So they don't want people backing into the value through our portfolio. We had to really strike a balance with this of how do we have a privately traded security that's more public? So how do we provide information to investors that's important for them to have? But how do we also maintain the privacy of the companies? And so what we say is every position it represents 2 to 10% of the portfolio. That's our target and kind of where we go for. But we can't disclose exact position sizes that we have in each. I imagine that our portfolio will have 10 to 15 companies once fully invested.
Okay, you keep on stealing my later questions. That was going to be one of the others. How many companies you're targeting for a portfolio? But we've covered that. Okay, let's talk about the different protocols. So you mentioned security token issuance. This is something I'm really quite fascinated at the moment by, thinking like the full life cycle of a security token. You could almost call it protocol wars happening at the moment. We've got Securitize, the S protocol, Harper's R token. Some people say ERC20 is sufficient and we don't need any of these protocols. Where do you guys stand on this?
So I'm very protocol agnostic. It's to me, it's kind of a non-issue. Listen, if Ethereum doesn't exist and we want to move our token over to Stellar, we can do it. If we want to move it over to Neo or whatever other asset exists, we can do it. So part of our whole investment thesis is like, I don't know how to value a good protocol. I don't know how to tell a good one from a bad one, but what I can do is invest in the infrastructure around it. So I don't care if people are trading Bitcoin or Ethereum or we're built on whatever it is. We can make money on every transaction that happens. So when I look at it, listen, I don't know what'll win. Certainly one will win. But the great thing about how we've built our offering is like, if Ethereum didn't exist, we would just move to another protocol and have it on top of that. So it's cool to have that flexibility and know that, we can work with whoever we want. Right now, certainly Ethereum's dominant in the space because there's more Ether wallets. So it makes it easier to have an ERC20 token. And I think that's kind of why we went with Securitize, who's building on top of Ethereum.
Yeah, that makes a lot of sense. I think a lot of people in this industry almost want to pigeonhole themselves too early, and they forget how ridiculously early we are. If you're not nimble in a brand new industry, it's not setting you up well for success.
It's so early. I don't think people realize how early it is. People are like, oh, it's like the internet in 94. I'm like, no, it's like the internet in 1984. There's no one in this space yet. People are moving really slowly, and there will be an explosion. There will be a Cambrian explosion of this space, but we're still a long ways out. And so we're building slowly and we're building thoughtfully in the space. It's one of the reasons that we have a smaller fund. The market is not ready for security tokens like most people think it is. And so we're definitely a pioneer here, but we want to move thoughtfully and make sure that we can only deploy capital into the absolute best opportunities.
That's fantastic. A fantastic way you guys have built yourself. That's actually one of the reasons I told you before that I really wanted to have you on the channel. It was quite funny. around about a month and a half ago, I basically made a video talking about security tokens, how I think they're going to take off before utility tokens, because they're just taking the old system and putting a digital wrapper on it. It's simple.
Right.
It makes a huge change. And I was saying that the security token infrastructure is the ideal position to invest in right now, because you don't need to pick the winners. Like, I mean, there are certain winners within that, but when people talk about security token offerings, if it's such a company, it could fail. But if it's a security token infrastructure, at least it has a better chance of being part of something massive. While they could individually fail, I think it's got a better likelihood of success.
Well, and I'll tell you what's even better about that, and that not most people see, is that in financial services, there's always more than one winner. Mm-hmm. So like, there's Airbnb, really no competition. There's Uber. I mean, yeah, there's Lyft, but not in most tech investments, there is really only one winner. Mm-hmm. In financial services, there's always multiple, right? There's Barclays, there's Goldman Sachs, there's multiple banks that exist, because as humans, our human nature is to want multiple trust channels, right? We don't just want one bank, and we don't say like that's more efficient. I think people like look at Facebook or Instagram, which, Facebook's or Instagram's owned by Facebook, and you say, this is great, I don't need 30 platforms for this. But it's not how it works when it comes to financial services. So while we absolutely want to pick the biggest winners, it's not binary. So venture is usually a 0 or a 1, right? You either hit it out of the park or it goes 0. But we have the opportunity to hit a lot of singles and doubles and have a very, very successful fund.
Yeah, that absolutely, once again, is what I've been saying. It's talking about issuance platforms, and I've been saying that if we're eventually at least going to tokenize trillions of dollars worth of assets, do we really think only one protocol is going to be successful? The market size is absolutely gigantic, to the point where you could have so many different successes. And as long as you're investing into the right area, I mean, at the end of the day, it's a gamble. Everything is with venture capital, but it's picking where the potential return massively outweighs the potential risk. And to me, and to clearly you, this is the right opportunity. Let's discuss. Sorry.
And just one last comment on that. I think there's opportunity on the issuance side to make money in the short term, because it's my belief that the big banks will come and buy these issuance platforms.
Yep.
I think in the next 18 months. I think in the next 18 to 24 months, you'll see people like Goldman Sachs and people like Barclays, people like Bank of America come and purchase the Securitizes, the Harbors, the Tokenised of the world, because they'll say this is a massive, opportunity for us to make fees, which is what banks love to do.
Yeah.
So I think there will actually be some early acquisitions in this space that are particularly on the issuance platform side.
Yeah, well, I heard that Seed Invest the other day got bought by Circle, who are backed by Goldman Sachs. So
right, exactly.
Directly, it's already happening. Like a lot of people aren't waking up to it, but the opportunity is there. So I want to talk to you about regulation exemptions.
Okay.
In the US, you guys have A+, D, S, and CF. Now, from what I've read into it, A+ looks like it could be a good option to go down, in the sense that you could raise up to $50 million and have both accredited and not accredited investors. But it's slow, it's a laborious task, and as far as I'm aware, the government hasn't approved any for security tokens yet. So you guys are carrying out Reg D and Reg S, I believe. Correct. Why is this? And do you see this being the most popular option for future STOs?
Right. So what's interesting is, because we're a fund, we cannot use Reg A+. So Reg A+ is only for companies.
Yeah.
Which is, not a lot of people know that. And so we couldn't use Reg A+ even if we wanted to.
Okay.
Reg D and Reg S are the best choices for us at the current time. I think the real question here is how do we improve the accredited investor laws to make this accessible to more people? So, certainly one of the reasons our fund is 10 million is that because it allows us to have 249 US investors instead of 99 if it's over. So we were thoughtful in that construction. We issued the fund out of Cayman so that we could take more non-US investors and have not the kind of the onerous requirements of issuing that out of the US for non-US investors. And so that was part of it. The other part is that until we break down this barrier that only lets the rich get richer, because they're the only ones that can invest in accredited offerings, which is just crazy, we're really not going to truly democratize finance. We're not going to truly democratize venture capital. And so we're taking the first step in that. And listen, we're not here saying that it should be a free-for-all. Everyone should just be able to throw their money into this. But the accredited investor standards in the US were created in 1982.
Mm-hmm.
right? I mean, that's before I was born. And I look at that and go, okay, a lot of things have changed since then. One, we have this thing called the internet.
Mm-hmm.
And wouldn't it be amazing if people could go on and get some education on a platform that would then give them a certificate that would allow them to invest a certain percentage of their income in these offerings?
Mm-hmm.
To me, that makes a lot of sense. Or if you have a business degree, let's say, or if you're a professor at a university, I think there's a number of options that could work. So we're for regulation. We believe it's a good thing. We're not off in ICO land raising illegal securities, and we work with the regulators to do this in a compliant manner. But I think that the regulators could work with a lot of the community that exists, and let's figure out a solution to provide access to people. Because if someone invests as little as $5,000, and that $5,000 were to become 25,000, and then that 25,000 became 500,000, that can change someone's life drastically. And I think it's wrong to tell someone who understands what they're investing in that they can't put their money where they want to.
Yeah, I am really quite passionate about that, actually. Like I read the other day, it's 2.9% of US citizens are accredited investors. So for if you're offering, for example, it's only accredited investors, and I mean for everyone's, not just yours, that will be 2.9% of the population can invest. So if you do fantastically well, that is literally the rich 2.9% of the world getting, the US getting richer. And if I don't live in the US, so I don't necessarily have to follow it. I'm okay. But I feel like it would be terrible if I was based in the US, having done a ton of research into this market, and I feel like having read a lot of books, I kind of understand it, that someone who got really rich off opening a bunch of restaurants but has no idea about capital markets would have greater level of investing capabilities than me. I find the whole thing absolutely crazy. And as you say, the transition towards some sort of test, I mean, I don't know why that's not currently the case.
Right. And I think, the chairman of the SEC, Jay Clayton, mentioned something a few months ago that they were trying to think of a better way to define accredited investor. And I hope they're still pushing forward on that. And I hope they find something that allows more people to participate because, like you said, it's 2.9%. And the other issue is that companies are going public much later than they used to.
Mm-hmm.
So instead of being able to get in an IPO, which would have been like a Series B, Series A today and make money, a lot of money, that doesn't exist because companies like Uber stay private for many, many years till they're worth hundreds of billions of dollars.
Mm-hmm.
And so the combination of the difficulty of IPOs, which was, I think, created a lot with some regulation in the early 2000s in the US, pair that with the accredited investor rule, and it's hard for a lot of people to have access to these investments. So we're very for working with regulators to come up with a great change. And it is funny, like you mentioned, we have a lot of investors from Japan in NYCQ. I actually just met with them before our interview here, and they think it's, they kind of laugh. They're like, so we can participate in this, but someone just like us in the US can't.
Yeah.
And it's pretty funny to consider. So, we're excited to work with investors all over the globe, and hopefully this can be a model for what we could do in the States.
I sincerely hope so. It's something that absolutely needs to change. So talking about security token barriers. So right now, the security token offering model makes absolute sense. I mean, it should be a truly viable and popular method of fundraising. But you could argue, for example, liquidity. Liquidity in the secondary markets is all so brand new. That could be argued as a barrier to, as I say, for this to become a truly viable and popular method of fundraising. In your opinion, is there anything else? If liquidity was built overnight, I know that's not realistic, but say in 6 months when it is built or longer, do you think there's going to be other barriers to stop this?
So I think liquidity is interesting, right? So we're a venture fund. Venture funds normally have very long time horizons, like 8 to 10 years.
Yeah.
And certainly I understand people don't want to be locked up for that long, but our offering, if you don't want to hold it for 2 to 3 years, like it's probably not a good investment. And it's probably not a good investment because we invest in startup companies, and those companies take time to mature and have markups in the portfolio. And so I think that that's a really important point. We'll never see currency like liquidity in the security token market, right? Just like, so today, if you go to the shop and you bring £1 to buy something or $1 to buy something, they're going to take that and it's going to be easy, right? That's like a Bitcoin. If you go with a gold bar or you go with a stock certificate from something, that's going to be a lot harder to transact.
Mm-hmm.
So we won't see that type of liquidity that we see with Bitcoin or anything like that. And that's okay, right? That's a good thing. We certainly, want to have a stable securities market, but it's why we've partnered with people to help facilitate that. and centralize a lot of it. There's some people in this market that are only open to US investors. There's some that are still getting started. We're actually announcing, I guess we're announcing this soon. I guess after it'll already be announced by the time this comes out, but we're partnering with SharesPost, who's one of the largest secondary market exchanges for primary issuance for our fund. So they're going to sell the offering. We're going to work with them on coverage. So they're going to cover our fund like an analyst would cover an equity. We're going to partner with them for custody and then also secondary market trading.
Talking of custody, that's actually quite an interesting topic, because with utility tokens, people love the idea of holding their own private keys, me included, because at the end of the day, you had no legal recourse. With a utility token, there was no legal framework. So if you didn't hold your own tokens, you literally didn't own the asset.
Right.
With security tokens, because there is going to be a legal framework, like even if someone is my custodian, it's still legally my assets, and I can go to the law and I can sue them if they won't give it to me. Do you think we're still going to have this potential drive towards holding your own private keys with security tokens? Or do you think we're going to move more towards the traditional system with custodians?
So I think we'll move toward custodians. Certainly people can custody their own. The important thing to remember is, like with our offering, you still fill out a private placement memorandum, a limited partnership agreement. You still fill out a subscription agreement. So we have all these very traditional documents. So we know who owns what. So if you custody this and you lose it, it doesn't matter. We just reissue new ones, right? Yep. So what's important about the tokens or the digital assets of our offering is it facilitates the secondary market trading. But it's not a situation where you have, you can lose it or someone can steal it from you because we go, well, we know who owns that. So I think that custodians moving to the space is a big thing. But the great thing is you don't have to custody it with somebody. You can keep it yourself if you want. For our token, any wallet that holds an ERC20 token, you can keep it on there. So we give people both options. Certainly traditional investors want a custody option. They don't want to keep this themselves. That's really, really scary. And I think there'll be more solutions as time goes on. Again, we're really, really, really new in this space, right? And so I think we're going to have a lot of solutions. Someone is going to come up with a solution for, sending cryptocurrency wallet to wallet that isn't a string of numbers and letters, because the mass public isn't going to do that, right? That's how email started. When email started, it was literally a string of numbers and letters when you sent it to someone. It wasn't Robert's, at CityBlock, it was a lot easier. So someone's going to come up with a solution and make it better. But for traditional players, certainly custody is very important.
Yeah, I completely agree. Particularly in the early days, you have to cater to both markets. If you don't offer private keys to crypto investors, they won't like that. But if you don't offer custody to traditional investors, they're certainly going to hate that. Now, talking about CityBlock Capital's raise, I want to ask, how is your current raise going? I understand if you can't give an exact number, but also, do you have a rough time frame of when you think it's likely to close? Once again, if you can't offer an exact date, that's absolutely fine.
Yeah, so we don't disclose exact numbers, but what we'll say is that we plan to have our fund closed by February 22nd. So that'll be kind of the last day. What I would say, especially to your listeners of this, I think is really as a challenge is I was the chair of the morning of the Security Tokens Realized conference in London. And I put a poll out and I said, how many people have invested in security tokens? And maybe 5 out of 300 hands went up. Then I said, how many people, want to? And 300 out of 300 hands went up. I was kind of shocked. And I think what's interesting about this space is a lot of people are excited about it, but not a lot of people are putting their money where their mouth is. In other words, like not a lot of people are actually participating in this market. And so, people say, oh, we want to grow it. We want to be part of it. And the challenge I would give to your listeners is if not NYCQ, if not our offering, invest in this space. Find an offering and put money into it because that's what's going to grow this space at the end of the day. That's what's going to make it evolve and make it better for everybody. So February 22nd, we will most likely be our final closing of our fund. Again, it's a $10 million fund. And the great part is it's extremely accessible for non-US investors with minimums starting at $5,000 US dollars.
Now, why did you guys go down the route of raising via the public? Because you could have, at the end of the day, I know you have the tokenized VC fund model, but you could have done private equity and then later tokenized your fund. So why did you go down the public fundraising route?
So I think that's what's interesting about this space is the ability to connect individual investors with some of the best managers in the world. And that's what CityBlock's doing long term, right? We're partnering with amazing managers. In this case, it's Nikhil and Atit of CoVenture.
Mm-hmm.
And we're allowing someone, that can write a check for $5,000 to have access to them. And these are guys that, normally you'd write a $500,000 check
Mm-hmm.
To have access. And it's really important to us to build a community around these offerings and have individuals from all over the world participating in what we're doing. So yeah, we could have raised a traditional fund. We could have gone out and just raised it from the investors that we know that are, high net worth. And certainly we have a lot of those participating in this offering.
Mm-hmm.
But part of this was the ability to provide access and liquidity. So if we went out and we only had 10 investors, let's say,
Mm-hmm.
there's not a lot of liquidity there. But the more investors we have, the more liquidity there is. And if we want to prove that this marketplace can work and that we can make it work, that's what we have to do. So certainly it's been more difficult to go out and get thousands of investors instead of tens of investors. But at the end of the day, if you make, your money, let's say your money doubles in the fund and you say, I want to take my money off the table, right? It's like what I would do if I'm playing, playing at a casino or gambling, right? You say, all right, put the chip in your pocket, take it off the table. We want there to be that liquidity so that you can sell it and someone can buy it. And if there's few investors, then it kind of defeats the whole purpose in our mind.
Yeah, absolutely. In fact, speaking of liquidity, I have just kind of thought of something interesting. I might be an obvious answer, might not be. Due to the regulation exemptions followed, you guys can only have a total of 1,999 total investors. This includes US and non-US.
Right.
If tokens are traded on exchanges afterwards, number one, how do you ensure that the number of token holders doesn't rise above this? You don't have 2,000 token holders. Actually, yeah, just jump in with that and then I'll ask the second one after.
Yeah, so it's actually programmed into the smart contract in the code. So It knows how many tokens are outstanding, and it will know if there are 2,000, it will only let you sell directly all of your stake to another investor,
mm-hmm.
right? So, I think that we wouldn't have 2,000 to begin with. Maybe we'll have, 250, maybe we'll have 300 investors, and then that can grow as they sell it. But once it hits 2,000, you then no longer can sell to multiple parties. You could only sell your offering to one party. So that's the cool thing about the securitized DS protocol,
mm-hmm.
is that it's what creates those regulatory restrictions.
Yeah, that's one of the key selling points of security tokens, being able to bake that into the code. Now, how does that affect liquidity? Because let's say you have 1,999 investors already, they wouldn't be able to sell, say, 50% of their tokens to an external person. Do you know what I mean? You have almost like a group of 1,999 people that can trade between themselves, or you could trade 100% out to an external person, because that would still keep the number the same. How do you see that playing out with liquidity?
Right. So it's certainly an imperfect system, right? It's the first thing to acknowledge that it's the best we can do with what we have today.
Mm-hmm.
We deal with it a couple ways. One, we don't have 2,000 investors to begin with, right? Mm-hmm. So we have maybe an eighth of that. And that gives investors opportunities to sell to other people in the future. Mm-hmm. The other part of this, and I think the other thing to remember, is that some of those positions are largely concentrated in people that will not be selling. Mm-hmm. So we have some large blocks of investors that they're just going to hold till maturity, because that's how they invest in venture funds. So there's actually more liquidity, I think, than people think. Mm-hmm. I also think that people won't be selling like $1 here and $1 there, that it'll be larger amounts than that. And certainly something we could consider in the future, and I think is a good point, would be like, all right, what's the minimum amount that can be sold at one time so that it doesn't use up all of those allocations? Trading is still a little ways away, but that's something we're going to focus on, and I think we'll optimize as time goes on to improve the experience for investors. Because just like this space is new, it's a learning experience. No one's really ever done this before, so we're pioneers, and so we'll look for feedback from our community that says, hey, have you thought about tweaking this? Have you thought about doing that? Maybe this will help. And so we'll work with it as time goes on.
Yeah, you can't have all the answers at this point at the end of the day, because no one's done it before. Registration requirements. So you basically state in your PPM that companies with total assets above $10 million at the end of a fiscal year must register with the SEC. With your raise being $10 million, I assume this is the reason you've done $10 million. If you were to increase in value by just 1% next year, you'd then have to go through the process of registering with the SEC. Sorry, jump in. Go ahead.
No, so that's referring to some of the requirements of disclosure. So there is a difference between registering and submitting documents to the SEC about, we're raising money, and certainly we do that, right, through a Reg D disclosure that we say, hey, we're raising this money. We've raised, our goal is to raise 10 million. We've raised X amount of it, or we've raised all 10 million of it. Mm-hmm. The 10 million mark refers to specifically at issuance about the 249 investors when we talk about that element. So the registration requirements for funds, there's a number of things that can happen, but if our fund triples in value to 30 million, that doesn't change kind of our initial offering and how we structured it.
Okay. So would you then have to go through some sort of process if it went to 30 million though?
No, we won't.
Okay. So it's just about the initial raise, nothing afterwards.
Correct.
Okay. The fund administrator. So a fund, from my understanding at least, typically has an administrator who will do the fund accounting, NAV calculation, and taking subscription/redemption orders and maintaining the share register. It's usually an impartial person as well. Who is this administrator?
So for us, it's a company called Stonegate Global. They're here in the States. They work with a number of crypto funds, a number of traditional funds, and that's their job. So we actually keep, share register two places, one with Securitize, one with them. And then we work with an independent auditor, and that's the important part. The auditor is the one that looks at what the fund administrator does and verifies that it's true and accurate by doing a fund audit every year.
Okay. And I think really I'm coming up to the final questions here. We've talked about your investing thesis. We're quite well aligned on that. I completely think that the security token infrastructure is by far the best place to be investing at the moment. When it comes to control, who ultimately makes the decision? And does the risk officer have a veto?
So ultimately, at the end of the day, the investment committee is made of three people, and that's Nikhil, Atit, and myself. And we make decisions of investing based on consensus. All of their decisions of operation of the business are based on are my decisions, and as the manager, in conjunction with Max, who is my other co-founder.
Okay, and you guys have talked about having further venture capital funds in the future, so raising more money, launching other funds. Can you elaborate a bit on that?
So the idea behind CityBlock is that we can create a scalable model of venture capital that's accessible to investors all around the globe. So our first offering focuses on this blockchain infrastructure. Nikhil and Atit are the investment managers, but what we envision is a time where we can go out and find two other managers in maybe an unrelated sector. So maybe it's esports, maybe it's cannabis, like they're two really popular areas. Find amazing managers there and go raise money for a fund for them. So CityBlock could have hundreds of funds eventually in wildly different sectors with really great managers. And our idea is that it can elevate these managers' profile. It can get them kind of on the national stage. And it's a great way for any investor that can write, a small check as $5,000 to invest in this and have access and hopefully achieve a great return.
So you're not really thinking more funds in the blockchain space then?
There may be. Our focus is it has been a huge task getting this fund up and running. It's taken us 18 months and millions and millions of dollars to get this where it is, between lawyers and technologists. I mean, when we started this process, I remind people the word security token didn't even exist. Like we knew what we were doing. We knew it was this thing, but we didn't know what it was called. And I went to a conference even last year about this time in Puerto Rico, and people there were like, they couldn't even understand what I was saying. Because they're like, this doesn't make any sense to me. So I think the space is just coming around now, and there may be other managers we want to work with in this space. But our focus has just been getting this fund up and running. Once we have this finally closed and up and running, then we'll think about it. Maybe we'll meet a manager we really like that we want to work with in this space.
Absolutely. And final question, really. I'm going to ask you to not give your own personal opinion, so not the opinion of the fund. How do you see this space playing out? And I'll give my opinion first to kind of give you an idea of the kind of things I'm after. So when we had the ICO bubble, it was crazy. People were selling basically shit. Utility tokens, half of them meant absolutely nothing. Some of them had some use case, but a lot of them were pretty terrible. Security tokens make so much sense of just taking the old system and just giving it, as I say, a digital wrapper trading it much more efficiently, reducing a lot of the cost, taking out the middlemen. It's so obvious that I can see a bubble forming, because when human psychology works, that when everyone sees something as big, which is kind of feels like it's slowly happening with security tokens, then everyone starts to rush into it, and you have ridiculous prices appear well before the development. Do you think we're going to have more of a gradual growth, or do you think it's going to be explosive growth? And also, do you have a rough timeline that you potentially see this playing out in?
Yeah, so I definitely think it's gradual. I think, even though a lot of people are interested, they're still not investing in this space.
Mm-hmm.
The amount of ICO / now STO advisors, as I say, that exist out there that have never done an STO shocks me.
Mm-hmm.
They've never even invested in one, but somehow they're experts in it. They call me and offer to advise me all the time, and I laugh at them. But so I think it's going to be very gradual. I think we really won't see any market traction until 2021. I think that we have a long time before this space really takes off. And it's just because there's no dollars coming into it. There's nobody investing in this space. Everyone's talking about it, but no one's actually allocating capital to it. Mm-hmm. So I think we'll have to wait and see what happens in the markets. I think what could change that is if for some reason Bitcoin and Bitcoin goes back up to 20K, then maybe there'd be more people, allocating capital to invest in this space. Mm-hmm. But for now, I think it's going to be a long, slow grind. But that's why now is such an important time to invest. Mm-hmm. That's why now you can invest in the infrastructure when no one knows about it. And that's why we have amazing opportunities and these great deals that we think will be, hundreds of billions of dollars. The company's worth hundreds of billions eventually, because we can build now when it's quiet and not everyone's rushing in, and not everybody that has a fund is out there trying to allocate capital to it. So, we like building when the market's down and when it's depressed, and we think that's now. And we think we have opportunities into companies that will be the equivalent of Airbnb and Uber in 5 years time. Mm-hmm. So we're excited about that, and we've just kind of hunkered down and focused on this, and we're excited about closing our fund here and deploying the capital.
Mm-hmm. Well, from your experience then, what do institutions think when they look at this? Like, a lot of people I speak to see this as being the next step from ICOs, but I kind of have to explain to them it's not really that in a way. It's more the old system combined with blockchain. Are you finding that institutional investors are put off by the association of Bitcoin, Ethereum, and ICOs, even though really it's just a technology and there's no real link? Or are they seeing the distinction between the two?
So I spend 90% of my time trying to explain to people how this is not Bitcoin, how it's not ICOs. But the majority of institutional investors are not interested in this space yet.
Yeah.
They don't. I mean, there are, you saw some endowments, Harvard, Yale, that invested a very small portion of their endowment into basically Bitcoin, right? Into some funds. But they're not investing in this infrastructure. They're not investing in security tokens yet. And it's just because there haven't been any really big movers, right? Mm-hmm. So I think one thing in the US that's going to happen to drive that this year is once Bakkt announces their physically settled futures market, I think that could move the price of Bitcoin. Unfortunately, the US government keeps shutting down, and that's causing a lot of issues for everybody. So I think that once they get that could be a move this year. I think Fidelity is talking about soon they're going to launch their digital asset platform. It's going to require a couple events like that before people start moving in. But the infrastructure plays even harder to see, because you have to remember these institutions, most of them still don't understand Bitcoin. They still don't understand basic cryptocurrency. Mm-hmm. And so they have to understand that before they understand, oh, wow, this infrastructure can rebuild financial infrastructure. Mm-hmm. And that's why it's amazing, because kind of for the first time, retail individuals can access this opportunity before institutions can, because they're not even deploying capital at an institutional level into this space.
I find that crazy, because if I told my friend about Bitcoin, I would have to go through so many different ways of explaining to describe why it's big. But I feel like if I just told him, we got shares, we got equity, and we can do these 7 benefits, and you start listing them, then it would make sense. Kind of like how if you went from paper to digital, I often say, well, this is digital to blockchain, and you just get these benefits. Is it really that hard to get the message across when you just describe the significant advantages of it?
So I was at the Security Tokens Realized conference. There was a gentleman from State Street there, and he was saying, listen, the system we have works. If you want to send, Deutschmarks, we can send it invested on this exchange. And I don't remember his exact comment, but it was something along the lines of the system works. And that's the belief most people have, is the system works. And to a certain extent, it does. So the example that I always use is in developed markets like the UK and the States, we had no telephones, and then we had landlines. And then we went from landlines to cell phones. The majority of the emerging world went from no phones directly to cell phones, right? There was no reason to build out all that infrastructure.
Yeah.
And it's the same with capital markets. We have a very robust, in the UK and the US, electronically traded markets. Now, they're not efficient. They're wildly inefficient, and they're run off old technology. But what happens is the incumbents in this space look at that and say, but it works, right? Like I can go on my E-Trade account and buy a share of Apple stock today. Well, you can, but it's not that great of a system to begin with, and the whole world can't either. So what we see now with cell phones in emerging countries like India is that you can do much more on a cell phone there than you can in the States or in the UK. And what's interesting is the same thing is going to happen in this space, where we have this kind of old legacy system that works, but we'll be able to use digital securities and provide access to these emerging markets like we've never seen before. And they'll be doing things like buying shares of Apple on their smartphone on a blockchain-based capital market system. So, it's the same thing you saw with, there's a famous McKinsey, the consulting firm, had a big miss, right? That's pretty famous, where in the 1980s, they told AT&T that cell phones were going to be a fad. That's where we are today. People are saying this is a fad. This isn't real. It's really not that much more efficient. We really can get this done in the traditional manner. And what they're not seeing is what's going to evolve around them. People, when email first came out, said, well, listen, I can only check email when I go to my computer terminal at work. I only do that once a day. And so I can get my, what comes through the post, what comes through the mail is just the same. It's not any faster. Well, they didn't anticipate that we would have a supercomputer in our hands where we could go and look at, all the information in the entire world and get mail hundreds of times a second, right? That comes through. The same thing with digital securities. They're saying the system works. This is a little improvement, but it's not big enough. And what they don't see is the bigger infrastructure that's being built around it and things we don't even understand yet that will improve how these securities are traded.
I find that absolutely crazy. I don't know, it just doesn't fundamentally make sense to me. Like, you could argue Blockbuster worked. Yeah, but Netflix came along and they provided a better business model. Just because something works, it doesn't mean it will remain. If something is better and significantly better, it could eventually replace it. And like, I actually, at that exact conference I went to as well, I heard a fantastic quote, which was that previously we used to have paper shares, and then we went to digital shares, and no one calls them digital shares anymore because shares are digital. And the same transition is going to happen. So we're going to go from digital shares to security tokens, and then no one's going to use the word security tokens, and we're going to go back to the word shares because every share will be a security token.
Absolutely. I totally agree. And that will be a big revolution. I actually say we went from paper to electronic shares to digital, because I actually think digital may be a term we use in the future, not security token. Okay. Because I think tokens tend to have this negative connotation with regular investors. Yeah. And so I think we could see that happening. But yeah, absolutely. It's the same path, and it'll happen and everything will migrate. But you have to I tell people, you have to understand the legacy players in this space have something they think works because it works for them. Just like the taxi industry worked for taxi drivers until Uber came along, right? Yeah. They were like, why would you do this? This works fine. And so, innovation, Vinod Khosla, Khosla Ventures has a very famous saying, which is innovation always comes from the fringe. So Walmart didn't reinvent retail, Amazon did, right? Hilton didn't reinvent hotels, Airbnb did. So when we think about this space, the legacy players are never going to understand it. It's us on the fringe now that will drive the adoption for the mass market.
I think that's amazing. Personally, that's what excites me so much, to think that when you're actually at the stage where they think they're not going to be disrupted, you look back at any time in history, that's where the biggest opportunity was. So absolutely. I'm just as excited as you. Now, is there anything, before we wrap this up, is there anything that we didn't touch on during the interview that you'd like to add or you'd like to discuss?
No, I think we covered everything. All I would say is, would absolutely love your viewers as investors, and we have a tight time frame here, but would love to get them on board. And if you believe in this ecosystem and you believe this is the future, I'd ask you to invest in it and invest in, you know, what we think are some of the best deals in this space, the opportunity to make a lot of money in this space. But most importantly, be part of it, right? The people that were part of Apple, the people that were part of, you know, Netscape, the people that were part of Microsoft at the very beginning, were very instrumental people. And this is the opportunity to be one of those people that's really at the founding of a next wave of great technology.
But still, do not invest more than you can afford to lose.
Oh, absolutely.
Key message.
Yeah, 100%.
Yeah, well, that's a great message to finish on. So thanks so much for joining me, Rob. I've really enjoyed it.
Thank you for having me.